Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, at the start of the week, the Australian dollar gave bullish hopes. And that is, the market took the challenge to the upside, hit a wall of resistance around 69.60, and from there staged a significant downturn and now crushes the 69 support level and reopens the downside case to 68.65, or where the base holds roughly around 68.30. What started this was a series of Chinese economic data that missed expectations after reporting a drop in retail sales, industrial production in April. Retail sales fell by 11.1% in April from a year ago, more than 6.1% forecast decline, while the industrial production dropped by 2.9% in April from a year ago, in contrast with expectations for a slight increase of 0.4%. However, manufacturing fell by 4.6% also. In light of that, the Australian dollar is looking back towards the bottom side, as I mentioned, and if so, could see a break of 68.30, which would expose 66.5 to 66.90 before profit taking emerges. To reverse this bearish scenario, the market still has to clear the level of 69.60, which presently holds relatively strong considering the rejection that we saw today. Viewing the euro, well, the market at this stage expects another volatile week, but looking at the support, it's still respecting the level of 103.4060. Now, with that being said, the dollar index, which measures the greenback strength against a basket of 6 major currencies, refreshed its highs on Friday to around 105.3 before pulling back towards 104.60. Global markets have continued to display intense whipsaw price actions from one day to the next, and even within a single day, as market participants try to gauge the impact of the highest inflation in decades in the US of 40 years. Meanwhile, the US Federal Reserve will hamper growth in its effort to bring inflation under control. Let's see how the market plays, because if it respects this level again, or if upon a challenge of 103.40 to 60 area, could see the market take the challenge back towards the top side around 104.95 and reassess from there. As we can see, dollar yen still a little bit whippy as the market retreats from that top side around 130 and now looks back towards, I believe, re-challenging the downside, which didn't quite get there but still holds at 127, figure 45, and reassess. The technicals are buckled in terms of negative outlook towards this pattern and therefore could see the market test lower. Looking at sterling, well, the market did post a bullish outside range day but awaits confirmation, and that confirmation is around 123.15. A break above there would give us further indication towards the top side of 123.90 and reassess. Looking at sterling Kiwi, the market's reclaimed further gains, that is, at 196, and now presently poses a threat to maybe squeeze higher up towards the region of 196.40 to 196.80 and reassess. Finishing up with gold, the market is still in a downtrend. ADX is still holding to a negative case, and the RSI and the MACD support this view that the market may eventually reach the target of around 1,788 to 92, which is a little bit lower here. Let me just bring this down around this region, which was last posted back in January 2022. Let's see how the market plays from there. If we don't get a bounce, then we could even be looking down towards 1,740 as a potential target. And wrapping up with oil, the market rejected that topside challenge this morning, which was around 109.40.80. And from the downturn, it poses a further threat to the bearish case that appears to be re-establishing itself. If so, then I'm looking towards the region of 102.30.55 as a potential target and reassess from there. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the great start to the new week.